Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is just going to be our daily Bitcoin update video. It's really going to be a short and sweet one because there's not really much to say. It was an interesting day from a sort of intraday trading perspective, from a day trading perspective, because you had lots of volatility. You had a really strong open, and then you had obviously the US Open. US opened well, started to climb back down. And of course, the cryptocurrency market followed it. Some key things that I'm still paying attention to is this 24K level. You actually have not, this is your 24K. You've actually not closed above it to date. So we've still not had that daily candle close above 24K. And we've said, look, right now, really, we're just playing round number to round number. I wish I could tell you something a little bit more technical, but whilst this is working, it's what we're going to, continue to do. So 24K, you're now below it. You're not coming back above it. You can potentially look for the shorts. You've got more probabilities of shorts paying off here. Vice versa, if you reclaim your 24K, look for your higher levels and look for the longs. Everything is centered around Bitcoin. Bitcoin is very much acting in accordance with the S&P. Which can be very frustrating. You kind of want crypto to do its own thing, but if you're trading crypto right now and not watching the US equity market, mainly the S&P, I don't know what you're doing, because you're going to get a lot more directional information from that than you are, looking at altcoins and referencing it to Bitcoin. Bitcoin is, if altcoins are the ships and Bitcoin's the tide that rises and sinks all ships. The US equity market right now, certainly the S&P is really setting the pace here. And it had a really good day and then quite a negative close, actually. But it is Monday. Mondays are typically, there's this kind of myth out there that Mondays are the worst days, the best days, because it's where everything takes place. And usually Fridays are the worst days. Well, it's actually vice versa. Mondays are typically a pretty bad day for sell pressure. You've also got Fridays that actually are typically quite good. The kind of thinking behind Fridays, nobody wants to hold over the weekend. Now, that is true, certainly in volatile times, but typically actually Friday can be quite a good day. Just like one of the bullish months that you have in a year, typically, now it doesn't happen every year, but on probabilities, is the one that we're in currently, August. September has a nickname out there of Rectember. So it's going to be interesting to see what happens in September. You guys know ultimately do think we eventually take out these lows. But in the meantime, trying to trade this intraday is rather frustrating. I would rather we had some sort of directional break, even if it was just a swing failure, a deviation that takes us back below. This kind of price action, it's hard to trade, to be honest. Certainly taking very short, tight stop trades, you're kind of getting invalidated consistently, but that's just the name of the game, unfortunately. We did look at a schematic the other day that did show this as potentially an accumulation range that's ready to push up a little bit higher. That still potentially could be the play. The real issue for me is taking longs here, and we have taken them on a sort of day-to-day basis, but looking to only hold them for that 24-hour period or even less until our targets get hit. The problem with taking longs here is we just don't know what's going to cause this market to wet the bed. It's not going to take a lot. And I want to pull up the Bitcoin longs on Bitfinex. Since the start of the year, this has aggressively been going up and up and up and up. And this actually, I think, is probably going to be one of the catalysts that actually causes the next cascade of downside. Because these guys are getting squeezed. When they have to sell and close their long contracts, essentially they'll become forced sellers. Now, lots and lots of people are betting on this being the bottom. I think once you get that invalidation that it's not, that's when the cart tips over. This is when people panic. The big thing for me is this move doesn't look anything like institutions accumulating. Doesn't look anything like big players now getting back into the market. This is quite a low volume move, certainly if we time out and look at the weekly. It's a very low volume move. You had an exhaustive sell pressure. The pushback that you're getting is on actually pretty low volume. So there's not a heightened amount of volume here. And you've got to remember, this isn't all just buying volume. Lots of this will be selling volume as there's a battle taking place, which the buyers are currently winning. So it doesn't, to me, look like, you know, large amounts of accumulation are taking place. You can see back in 2018 and 19, you had a lot more volume than you currently have. Back in March 2020, a lot more volume. You know, even back here, a lot more volume than we're currently getting. And you're getting similar volume to what you had back when we were around that 44K zone. So it's quite simple for me, really, in regards to a day trading perspective. You know, look for the shorts if you're staying below 24K. Look for the longs if you get above it. And really, in the short term, that's the best that I can do for you. I'm asking I try and trade these markets every day. I'm asking myself the question, which way do I think it's going to go? And I think the answer is right now, I'm not 100% sure. Whilst we're below 24K, we'll go off that bias. You know, we're still struggling to close it. We'll look for downside. We'll look for maybe coming back and testing some of these areas within here. If we can climb above it and hold above it, we'll look for that upside. And you've got this nice little pocket here that I don't think would take much to get through. And I think that would really squeeze the shorts, give the longs more confidence before we then rip to the downside. For anybody interested in shorts, it's been rather stagnant. You know, we don't see anywhere near the amount of long volume in terms of prep contracts on Bitfinex that we do in comparison with the longs and the shorts. This is an interesting tweet from Will Clemmer. Bids in the Bitcoin order book on Coinbase are stacking down from 17K and below. A lot of people are hoping to buy BTC lower. The last time the order book was this skewed to the bid side was the grind up from March 2020 lows. Okay. Potentially, you know. But there's a difference here in the sense that was going up. So the bids actually took place when the price was already going up and we had that capitulation bottom. The bids are now taking place below. So it's interesting. You know, this doesn't really, in my opinion, show much confluence either way. So potentially, you know, we run into that pocket of bids. The issue that you've got is those bids can get quite, you know, that people can cancel their order. You've also got to remember that if we do get a cascade of long liquidations, you know, coupled with bad news that just comes out of nowhere, even though people would have already adjusted for it. I mean, I spoke to you guys yesterday on my daily crypto video update on the fact that Larry Fink, the largest asset manager in the world, has actually sold 8% of his shares in his own company. Last time he did that was before March 2020. Right now, the main question you want to be asking yourself is, does the risk outweigh the reward? Or sorry, does the reward outweigh the risk? If the answer is no, should you be investing? Should you be getting back into the markets? You know, listen to yourself. You know, you guys will all have an intuition on this sort of stuff. Some people are better to speak on it than others. Ultimately, we don't know with 100% certainty what way the markets are going to go. What we can do is give you a relative idea. And of course, I'll be placing my bets accordingly on that. So this is interesting somewhat. Doesn't mean that we can't come back down into it. You know, I don't think March 2020 was a real capitulation event. I don't necessarily think that we've seen capitulation for Bitcoin. These are just legs lower, right? So there's no real, you know, you can see you have these legs consistently. Okay, they've been a little bit more fast. That just is probably quite a good indication of the leverage in the system. But to me, this still looks like structurally getting out of a position. You know, it's also a hard short right now, actually, because look at what you're doing here. You're climbing, you're reclaiming, you're still putting in lower lows and lower highs. Higher lows and high highs. You failed to put one in here. Okay, now if you come back down and put in a lower low than this previous higher low, you know, what does that mean? That means you're basically invalidating the short-term trend. And until you can get some sort of decisive move either way, you know, you can start maybe stacking those probabilities on your favor. Big thing for me is volume. Do we have any divergences here? Yep, straight off the bat. RSI, diverging down. Okay, now you didn't put in a new high here, so it's natural that you're not going to run this. But even still, the divergences were showing up previously. Your money flow index. Again, divergences. And actually a big divergence here, given just how close you actually were to this high. You actually ran 24K. You know, this is kind of showing to me that the move is somewhat losing a bit of momentum. You know, and you've not had this continuous increase in money flow, and you're actually going to decrease in it. Again, look at your accumulate and distribute index. Same story. You know? So there are a few. Nothing that I would, I wouldn't bet the farm on these divergences, but it's just, what am I looking at? I'm looking for reasons to short here. I'm looking for reasons to long, and I think there's more reasons right now to short with very low leverage. By the way, for anybody that is shorting, if you're new to this game, start off with a very small account or even a practice account, and don't use high leverage. I know it's appealing. I know it's sexy to do so, but being broke isn't sexy, and that's probably where a lot of you are going to end up if you use a lot of leverage. So yeah, all just confluence. But this was really just a short and sweet Bitcoin update video. We'll finish off actually on looking at the open interest. Open interest absolutely shot up yesterday. Really gave the backing to that move. Bitcoin at one point was up 4%. Open interest actually yesterday was significantly higher. Open interest at one point yesterday was up 13%. So you can also see that there's that battle between the buyers and sellers. Open interest is up that much, but the actual price is only up this much, 4% or so. And then it actually started to sell off. So you can see there's a real battle taking place here between buyers and sellers, and open interest or essentially prep futures contracts opening on exchanges, which is certainly interesting. And we will see what takes place. We know that there are record shorts basically on like the Nasdaq, the tech sector, and actually the US bond market at the moment. So there's lots and lots going on that you've kind of got to try and work out. This was really just a short and sweet video, guys. I know it's gone on for 11 minutes now. Hopefully this has given you somewhat of an understanding of where or what we may be looking at. Until we get this decisive break, there's no really kind of majorly high conviction trades taking place. For now, we'll take the short side until proven otherwise. If we get stopped, we'll look for the longs. All I've got for you in this video, guys. If you enjoyed the content, like us, appreciate it as a comment. I look forward to seeing each and every one of you in the next YouTube video. Thanks a lot for watching, guys. Have a great day.